DBS Treasures Annual Wealth Summit powered by CNBC-TV18.com.
Hello and a very warm welcome to DBS Treasures Annual Wealth Summit powered by CNBC-TV18.com. I'm your host, Mugdha Kaldra. We've all gathered here today to explore the dynamic landscape of wealth management, an industry that's undergoing a profound transformation. The wealth management landscape is at a pivotal juncture, faced with a convergence of disruptive forces that are reshaping the very foundations of our industry. On one hand, we are witnessing a significant wealth transfer from the older generation to the young, tech-savvy cohort. Now, this demographic shift is accompanied by a heightened demand for innovative digital solutions and highly personalized services. At the same time, new players are emerging, challenging the status quo and pushing traditional wealth managers to adapt and evolve. The market landscape is shifting, and incumbents must act swiftly to safeguard their position and stay ahead of the curve. This confluence of factors presents both challenges and opportunities for wealth management professionals. How can they harness the power of technology to deliver exceptional client experience? What strategies can they employ to navigate this era of disruption and continue to protect and grow their clients' wealth? These are the critical questions we will be exploring, addressing in depth throughout our event today. So let's dive in and uncover the secrets to thriving in the new era of wealth management. But before all of that, may I please welcome on stage Senior Editor, CNBC TV18, Surabhi Upadhyay, to deliver tonight's welcome address.
Thank you, Mugdha, and good evening, ladies and gentlemen. Thank you all for joining us here on a rather hot, sultry Mumbai evening, but it's a Friday evening, that's the best thing about it. And we're here to discuss a subject that's really been very close to my heart over the last many years that I've had the opportunity to track wealth management and personal finance, being a journalist with CNBC TV18. So I get the best of looking at things through both prisms. My day job is looking at financial markets, tracking the daily ups and downs and all the policy changes that happen. And the other aspect, as I said, is really wealth management and personal finance. That's really closest to my heart because it helps us tell the story of a changing India, the story of an India that's getting more and more aspirational, that's looking at best products and best services and is really looking to ride that wave of momentum and sort of economic prosperity that we're seeing ahead of us. So welcome to the inaugural DBS Treasures Annual Wealth Summit. Of course, it is powered by, as you would have imagined by now, CNBC TV18. I just want to put a couple of points on the table, and I'm sure that our panelists through the course of this evening will share excellent insights that help us think about some of these issues. So as I see it, we are at a very, very interesting cross-section between a couple of paradigms that are taking shape right now. One is a booming economy. Every time I speak to market experts, market participants, the underlying message remains extremely positive. You look beyond the ups and downs of the Nifty and the Sensex today, but the narrative that remains very, very focused and congruent is the fact that our underlying macros perhaps have not looked so good in a long, long time. So booming economy, which gets a thumbs up, growing wealth and the wealth effect, and then the need to ensure that this wealth is being managed in the best possible way. And that means increasingly sophisticated breed of investors who are looking at best-in-class products, services, and who want the best-in-class solutions, coupled with, of course, what is a very fast-paced, changing technological landscape. So how does the wealth management industry, which is at the cross-section of all of this, manage what is pretty much a wealth and technology explosion taking place simultaneously? That's something that I personally would really want to hear more about as this evening progresses. I'll just throw some stats, and these are stats coming in from the BFSI sector itself. What are we talking about in terms of the opportunity? The number of ultra HNIs, which is people with more than 30 million of investable surplus, is projected to increase by about 55 to 60% in the next 3 years. There are 3 individuals which are joining this ultra HNI sort of club every single day, and that's the pace of growth that we're talking about. And the wealth seems to be coming from everywhere. It's not just here in South Mumbai or in Delhi, but it's coming from tier 2, tier 3 cities as well. So how is the industry geared up to capitalize on this opportunity? The mutual fund industry has had a phenomenal year. We've just closed FY24 with a growth of nearly 35% in assets under management. The figures, last standing figures, stand at 53.4 lakh crores as of March FY24. So what else lies ahead of us when we're even looking at the mutual fund industry that has been hand-holding not just the HNIs, but the mass retail revolution that this market is witnessing. So ultra HNIs and HNIs, they're looking at sophisticated sort of strategies, best-in-class products, and the retail or the mass affluent segment, which is very fast growing as well, that's where there's perhaps still a wealth of opportunity looking at all the fixed deposits that are still lying in our banking system. So can the industry get some of that shift going, accelerate some of that shift? I mean, those are thoughts that, we'd want to hear more on. Finally, I just sort of end by posing 3 questions to all the panelists and the speakers that we'll hear from today. How can we use technology to get to clients with precision and agility? Question number 1. Question number 2, how can we use technology and scale and yet remain highly personalized? And question number 3, how do we embrace the phygital reality, which perhaps is, the truth that we see all around us? So how do we get the best of both worlds, and how do we strike that balance? So I think I've kind of, touched upon a few areas that we'd want to hear more on. The theme of today's summit is Paths to Profit, Resetting the Wealth Horizon, and I'm sure there's a wealth of innovative ideas and a wealth of information, a wealth of sort of experience sharing that we will get from this evening today. So once again, ladies and gentlemen, let me welcome all of you to this inaugural DBS Wealth Summit. Let's take it away for the evening. Mugdha.
Thank you, Surabhi. Thank you so much. 3 very important questions posed there, and we hope to get answers not only about those questions, but a lot more. And now to set the ball rolling for tonight, set the context once again for all of us, and to tell us more about DBS Treasures, please welcome on stage Managing Director and Head Consumer Banking Group, DBS India, Mr. Prashant Joshi.
Good evening, everyone. Thank you for being here today evening for the very first DBS Treasures Annual Wealth Summit. We hope that this feature becomes a part of your annual calendar every single year from here on. When we were planning this event, people said there couldn't have been better timing to do this event with markets being on such a high and markets being where they are. And the only response that we had was that, frankly, any time was good to do this event. Because the way DBS looks at wealth and markets is not on the basis of lows and highs. We don't get ecstatic because the markets are on a high, and neither do we get depressed because the markets are low. Because wealth, as some people in the panel will later tell you, is something that's got to build over a period of time, something that's got to be built through the cycle, and needs to last for generations together. And if we don't have that view to wealth, we shouldn't honestly be in business. With that commitment, DBS Bank works, and with that commitment, DBS Bank is amongst the only 2 banks in this country which, as a foreign bank, operates here as a wholly owned subsidiary. As a measure of that commitment, we amalgamated with a bank with a very large network 4 years back. And now we have 525 branches with 2.5 million customers and an outstanding digital platform called DigiBank. And to Surabhi's point, which uses AI to great effect, for helping customers, enabling them on their digital wealth. The Treasures platform that we have for wealth management is the primary platform that we have in India and elsewhere, of course, in Singapore, which is the heritage that we enjoy. So we have Treasures platform in India for wealth management. There's a Treasures private client platform, which looks at HNIs and ultra HNIs. And in Singapore, we follow that up, with private bank, and amongst the banks actually in Singapore, which has the largest market share as far as family offices are concerned. But more important than what we do is important as to how we do it. And trust is at the center of everything that we do, which should not be unusual at all for a banking institution to be talking about. But we live in times where it's important to mention it again and again. And how does one win trust? How does one develop trust? There are only two elements to trust. One is competence. The second is integrity. And we do believe we bring both of those to the table. And on the basis of the trust, and that's how we would like to do business with our customers. And which is one of the reasons, why over these several years, we have been voted as best bank in the world, best private bank in Asia now for last 3 years consecutively, and the safest bank in Asia as well. I think now for 15 years, for the last 15 years. With that, I'm really looking forward to all the panelists, their sessions, and what we can gather from there. But I do genuinely believe that after this Mumbai chapter and Delhi chapter that we have over the next week, that this event genuinely becomes a thought leadership event for wealth in this country. I welcome you again to this very first event of DBS Treasures, and look forward to all the discussions in the evening today. Thank you.
Thank you, sir. Thank you so much. With that, we start the evening's agenda. The wealth management landscape in India is undergoing a profound transformation, as we mentioned, fueled by the increasing numbers of high net worth individuals, HNIs, who are tech savvy and affluent and demanding. As the country's economy grows and its affluent population expands, the middle class also expands. There is a rising demand for personalized, digitally enabled wealth management solutions. It is time for our first session of this evening, themed The Changing Face of Wealth Management in India. And to take this fireside chat forward, may I please welcome back on stage Surabhi. Also, put your hands together for her guests, Managing Director Aditya Birla Sun Life AMC, Mr. A. Balasubramanian, and Managing Director of Kotak Mahindra Asset Management Company Limited, Nilesh Shah.
Good evening, ladies and gentlemen, once again. So let's get this party started, as they say. I have with me two of the veterans of the Indian asset management industry. They need absolutely no introduction. You hear from them. And today, it's great to have them alongside each other so we can have a bit of a jugalbandi of ideas and you sort of learn from them firsthand what's happening in the market, what's happening in this industry. Nilesh, of course, from Kotak Mutual Fund, and we have Mr. Balasubramanian from Aditya Birla Sun Life Mutual Fund. Thank you so much for taking out the time and joining in to both of you. So as we set the ball rolling, let me just first try and understand how you describe where we've reached today, especially the post-COVID period, Nilesh and Bala sir, because a lot has changed. There's a whole new sort of array of investors that are coming into the markets, trying different products. And as an industry, now mutual funds are offering a lot more than just traditional products, right? There's a growth of AIFs. You all have your PMS platforms as well, PMS services. So just tell us the journey post-COVID and what sort of an inflection point are we at? Nilesh?
So the journey post-COVID is like dream come true. Things are really going well for India. We are the fastest growing major economy. The steps we took during COVID, like giving credit guarantee scheme, is now textbook example for other countries as to how they should manage during crisis. And markets have delivered great return. Today, if I look at India, it's unbelievably amazing. And the best part is that not only we are doing good, but others are scoring self-goals. So whatever we are doing is looking even better and brighter than what we are actually doing. So, सोने पे सुहागा जैसा है. And there is one part of the market which seems to have run up too far. That's one portion which one should avoid. Low floating stock counters where prices are rising, not only because of fundamentals, but also because of concentrated holding and limited floating stock. Just stay out of that froth. Rest is all looking fine.
Bala sir, does your job become easier in rising markets, or is there no link between the two?
Yeah, definitely it become easier for a variety of reasons. One, first and foremost, fundamentals of the economy got stronger. I think India has become more stronger on the economy front compared with any other part in the world. I think post-COVID, you asked a question. I think we discovered many of the things which we used to assume is not good for the economy in the past. And those decisions cannot be taken, such as giving a guarantee to the MSME and so on and so forth. All such things fell in place during the COVID time. Why I'm specifically saying this? Me and Nilesh have spent almost more than 3 decades in the mutual fund industry, working closely with the regulator. We always used to go and make a pitch whenever there's a crisis happens to the regulator, saying we need to give more money in the hands of corporates, we give more liquidity and so on and so forth. The Reserve Bank Committee always used to be hesitant. But post-COVID, then the moment Government of India gave a guarantee, today MSME is able to raise money at one of the cheapest rate possible, which has never happened in the country in the past. And that's something that's happened. Low interest rate regime, high fiscal prudence, which is basically lower fiscal deficit, and tax collections have been growing faster. And economic growth is now it's about anywhere between 7 to 8%. So I call it as all cylinders are firing with high predictability from the overall growth perspective. That's something that's happened post-COVID. The biggest impact that has come is the wealth effect. Wealth effect is not restricted to, I think since it's the wealth summit, there is one status number which is there. In the year 2009, the representation of Nifty 50 companies, the overall market cap was about 80%. And today the same representation of Nifty 50 companies in the overall market cap is dropped to 50%. That means the rest of the market has come from the companies which is below the Nifty 50 company, which essentially means more wealth has been created for companies, more wealth has been created for the shareholders of those companies. And there's also now these SMEs don't come only from say top 10 cities. It's come from widespread, which is nothing but representation of Bharat. Also, I would say it comes in the stock market. Wealth effect has gone up. Third, which has happened is actually during the same period, most of the companies have discovered the power of their own companies through the next generation getting into the business. Which is what I keep saying actually that the old generation is gradually handing out the new generation. New generation is born with the, not even saying born with the mobile, they're born with the AI. Right? They actually, the adaptation of the AI is actually far higher for the new generation. I'm talking about say 28-year-old son of a promoters getting into the business. And this is now happening in every business. That means they bring in actually newness in the whole business model, which essentially means they are looking at the future value creations. That's the way I think that I see the transition happening, which is a good change that has happened. Therefore, for us, it becomes relatively easy. At the same time, as Nilesh mentioned, that much predictability becomes, especially on low float versus high float. Then how do you actually play that game? This is something it become. In any case, in every market, it stays. It's not unique to today. Every market we have seen the cycle. Therefore, as long as the fundamentals remain strong, I think we are on the right path. The overall perspective, the next say 10 years, will probably be the fastest growing economy, which I think the confidence far higher today. I think we have seen various cycles. That's something that I think is a lot more promising than just a dream.
Nilesh, I mean, as we sort of talk about now the next leg, the mutual fund industry itself, it saw explosive growth, right? 35% growth in assets under management across all categories. What does the wealth management industry need to do to gear up for the next leg? I mean, how is growth looking from here on? And then, what are you seeing in the wealth management landscape?
So, Surabhi, one thing where I would like to correct you. Mutual fund industry's explosive growth is coming from market and not necessarily from flows. As per RBI's own data of financial flows of household, in 3 years between FY21 to FY23, about 4 lakh crore came into mutual funds, about 1.5 lakh crore came into equities and other assets, and 9 lakh crore went into currency notes. When equity markets were delivering a century, collectively all of us put together decided to put 9 lakh crore, double the money invested into mutual funds and equity, into currency notes, which is a depreciating asset. That's the task of the wealth managers. They have to convince all these learned people that currency note is not a great investment, and you will make more money by investing in mutual funds or stocks or any other asset class. As long as wealth managers can convince these learned people not to invest in cash, I think our growth is guaranteed.
I think the way I also see is, I think wealth effect, we are generally looking at market and then linking that wealth effect of the country. Mutual fund definitely has created wealth for the investors. The larger pie, which of course in every household it is there, is the gold, one of the favorite subject of relation. Every household has got gold, an average of, I'm not even taking a kg, 100 grams of the gold every household would have minimum.
Looking at the gold markets right now, households will say it's very good to hold on to
Household
this
savings
gold.
also has gone up. Second is the largest holding is the land parcel. Today, the land prices across the country, not only stable, have also gone up. First time ever, we are saying one of the best stable real estate market in the country. We also have created the wealth along the side for the common, even the common public at large. Just even the common man actually can get their wealth increased, not through the stock market, through the other means. Just imagine the wealth effect of the people who are really learned people who have been in the market for long, the wealth effect has gone up quite substantially. This essentially means not just managing the wealth is equally important, it's also protecting the wealth is also important. That's why I think wealth management industry, I think is today is actually far more in a better sweet spot than maybe 5 years back. Today, the predictability of wealth is far higher. The need of the people who have got a wealth is also equally higher. Therefore, wealth management industry will probably become, my own gut feeling, will become larger than even mutual fund industry from a value point of view. From value point of view, the number of customers will be less, but the value that you'll be managing on a totality, I think, will be far higher. Therefore, my gut feeling is that wealth management industry today is in such a sweet spot, can become one of the largest industries in the next few years. Of course, DBS have seen this in the global market. They are one of the large wealth managers, most respected bank in the world. And DBS has been having a presence in India for more than 20 years. I have seen them being in the mutual fund industry in the past. And DigiBank, they were the first one to start. Therefore, probably they'll have a greater future in India in serving more customer needs in the country.
Speaking of digital, Nilesh, let's get your thoughts on this. What has the sort of changing phase of digitization in technology, what has that meant for your own distribution, sales, marketing, and what do you see? What trends do you see ahead as more and more purchases happen on this device that we keep with us?
So I think India is a heterogeneous market. There is a segment of senior citizens which have wealth and which will require physical touch from a service point of view and a tech-enabled delivery. On the other hand, there are Gen Zs who probably want a tech-led service as well as delivery. There will be need for branches, there will be need for technology, there will be need for RMs, there will be need for AI to deliver. Organizations which will leverage both and provide a continuous supply of relationship, service, and enablement, I think that will be the way forward. Like in real life, we have Udupi restaurants as well as 5-star restaurants and home delivery by Zomato and Swiggy. In wealth management also, all models will coexist.
Bala sir, your own thoughts on how you are seeing the whole digital wave evolve from a product manufacturer point of view, as well as how you see it from a wealth management point of view?
I think as the wealth effect keeps rising and more customers comes in, definitely servicing will become one of the bigger need. And this is why I think technology can play a larger role, and taking the advanced technology that has come, and somebody is starting today, definitely the features that they can build, which can help them give robust information to the customers in a one click, in a single platform, not only just for review, even for getting the service rendered through the digital technology platform. I think that's the way I think will change. Unfortunately, we are at very advanced stage. Even from a customer's point of view, understanding of digital is far superior. Therefore, anybody who's starting today is again in a such a good situation. Adapt the latest technology that is coming in today, like AI, everybody talks about it. Definitely, I think the information being available for the customers in a click of a button. Definitely, I think digital as a platform can has to go along with them in terms of with a more service orientation approach rather than just selling a product approach.
Okay. Nilesh, another point here that I think one thing that's for sure is that people in India, the end customer or client in India wants to experiment. They want to experiment with cryptos. They want to experiment with buying Apple shares directly. They want to experiment with small caps. People want to experiment. As much as I know you have on several programs and Bala is on several programs have said, keep it simple. Sometimes boring is the best way to create wealth. Despite those lessons, people want to try everything that's new. So, what does this entail? And will we see more product innovation from the industry standpoint? Or what do the next 5 years look like?
So undoubtedly, product innovation is something where we are lacking. Today, we can create many products which will satisfy the urge of the customers for higher return without corresponding higher risks which they take in cryptos or Ponzi schemes or NFTs and stuff like that. For example, globally, splicing of risk is acceptable practice. So if I have a fund, let's say, which can technically give 10% return, I can create it into two parts, one which delivers 7% return and one which delivers 13% return. Obviously, risk will be different in both. I can make even 5 parts if needed. The person who wants to go to Ponzi scheme, instead of going to Ponzi scheme, can come into this kind of mutual fund. And person who is going into cash, instead of going into cash, can also come into this kind of scheme. A lot of people invest in gold. Today it is possible to create a structure whereby you only have upside participation in gold price through gold stock options and no downside participation. Structured product is something which can take off big time in India if product innovation is permitted. Globally, wealth managers provide leverage, they provide splicing of risk, they provide structured solutions which enable different risk return requirement. In absence of those innovations in Indian market, today many of our investors are going abroad or they are going into, let's say, unorganized market like cryptos, NFTs, Ponzi schemes for higher risk and higher return. Unfortunately, only risk comes their way, return rarely comes.
Bala, your thoughts on this, that people want to innovate and they want to try new solutions, new products?
Of course, every market cycles gives you an opportunity to try and test new product. It's like eyeballs used to create values in the early part of internet period, and we have seen this evolving over product. And like crypto, so at the end of the day, from an investor's point of view, new product also have to take into account the risk associated with the such kind of product. Innovation is always good. Leverage product globally it works very well. The leverage is done and then invested actually in securities where the value of security itself will disappear. Then it's not worth doing the leverage and doing the transactions. Whereas do a leverage but invest in underlying govies bonds and therefore it gives about 3-4% extra return is worth doing it, right? Such kind of product innovations definitely can, there is a merit, more product innovations can come. As Nilesh mentioned, even alternate product, more innovation can come. At the end of the day, from an investor's point of view, by doing all such things, how much the alpha I am going to get? If the alpha that I'm going to generate with the risk that I'm taking, if I'm going to get the reward significantly higher is worth taking the risk. If the reward is not going to be significantly higher with lower margin of safety, then it's better live with traditional investments with some kind of combination. I think that would be worthwhile doing. At the end of the day, in the longer term compounding, everything gets equalized. So if you chase the return, it gets equalized. The return comes only for a short period of time. After that, it disappears. Therefore, from a product innovation, definitely is good. But taking into account the underlying risk associated with this kind of product innovations, that's something should be kept in mind from an innovation point of view.
That's where the role of the wealth
So
manager
one
also
more
comes
point on innovation. I think we should respect native intelligence. Long before the world had discovered special purpose acquisition vehicle, India had Khoka company culture. We will merge an unlisted company into Khoka company and create listed company. We discouraged that. The world adopted that and created SPAC. Long before futures and options became relevant, we had what is known as Jota Fatak outside of Lalit restaurant. That Jota Fatak was the precursor to futures and options. Even today, in Ahmedabad, Rajkot, Jaipur, and online Chittorgarh, there is grey market going on. Those are the people who know well before us which issues are worth applying and which issues are not. But that entire grey market is below the ground. Can we bring that out open in market on platform through beneficiary market? Between Khoka, grey market, and Jota Fatak, we had the native intelligence to create innovative products. Why should we wait for Khoka to return as SPEC, Jota Fatak to return as futures and options, and grey market to return as beneficiary market? We have that intelligence, we should leverage that.
Which brings me to the final point that I want to hear from both of you on just the regulatory aspects and the setup right now. While the regulator has been very active, and especially for mutual funds, I think the SEBI has been extremely active on various fronts. But overall for the industry, for the wealth management industry as well, how do you describe the current regulatory setup, and if you think there are any changes or any tweaks needed to it?
So one, all of us have realized that without the guardrail of SEBI, we would not have reached where we have reached. In the bowling, guardrails are more important. Otherwise, your ball will go into different lanes. And Ponzi schemes, NFTs, cryptos, gaming, all those industries without guardrails of regulations have failed. So we are thankful that SEBI is there to regulate us. Second, during the COVID time, regulator was calling us as industry body, do you need any help? Do you need any support? And that proactiveness of regulation is something which we should truly be proud of. Even today, if I have to call, and I'll give you a live example. Just few months ago, the Eid and Ganesh Visarjan were coming together, and then the date had to be shifted. Now that would have created havoc for us because our monies were locked in for 2 days and we had to make the payment previous day. We had money, but not the liquidity. We could work with regulator till 1:30 in the night and find a solution whereby entire market function without any worry. Openness of regulator and their guardrails is because that's why we have reached here.
I think not just only COVID, where the regulation came under support of the industry, even global financial market crisis, too, we saw regulator coming and intervening in the market to support mutual industries to overcome the crisis at that point of time, and then build the business for the future at relatively a stronger base. And with the industry growing, with the mutual industries, whatever certain the regulatory framework has been evolving with the industry, working together with them and growing in size. The same thing will happen for alternate business as well. As the size becomes bigger, as more and more participation comes in, definitely the regulatory framework coming and drawing a boundary is always the best interest of the investors, best interest of the and the industry, best interest of the whole system itself. So I think in India is far more better, given the reason that they work closely with industry bodies, understand the practical difficulties before framing any kind of regulations, which in my view will continue. And that's why we have created success. That's why we made the industry also grow. That's why whenever the crisis comes and hits, we don't get so much worried about the financial market getting into some kind of trouble, because the regulatory framework ensures it gives a protection for everyone who operates in the market.
Well, that's good to know. So we have a good regulatory framework. We have a good economic setup. We have thriving markets. So I guess for the wealth management industry, there's only one way which it can go. And I'm sure everybody in the room can guess which way that is, and that is up. Thank you so much, both of you, for starting off the session with some of these very, very interesting thoughts. Thank you.
Thank you, gentlemen. Thank you, Surabhi, for that. Surabhi, I will request you to stay back on stage. All right, moving to our first panel of the evening, which is on Gateway to Successful Wealth Management. And may I invite the panelists for the same, Mr. Ashutosh Bishnoi, Director, Multi-Act Trade and Investments, Mr. Tushar Bohra, Co-founder and Fund Manager, MK Ventures. Put your hands together also for Mr. Sudeep Bandyopadhyay, Group Chairman, IndiTrade Capital, and Richa Tripathi, Head Wealth Management Product, and DBS Treasures.
Well, one thing I'm very happy about is that we have another woman on the panel, and I think that's one thing the wealth industry can do with more of as we talk about the future. And I'm going to ask Richa about this as we go forward. But thank you very much, lady and gentlemen, for being here and taking up the first panel discussion. So the theme for this panel, the topic for this panel is Gateway to Wealth Management, the opportunities and the sort of landscape that lies ahead. So I want to start by opening up the panel and getting thoughts from all the panelists on sort of where we are and what are the chief one or two trends that they see in the industry. Again, we're talking about the post-COVID era. We're talking about when there are a lot of new products coming in the market. So let's start by understanding what the top 2 or 3 trends are that you have observed when you deal with your clients and what you observe in the industry at large. Ashutosh, you want to take that off? Yeah. Yeah. We'll start from there.
Thank you, Surabhi. So maybe the part of the market where we are operating, the trends don't change very easily. This is the family offices domain, and we run our own family office as well as advise others. But some of the key features which have come forward, I think Nilesh Bhai spoke about, I think Bala spoke about how there is greater wealth effect happening. So we are seeing in the family offices space more and more families who are doing business, doing well in recent times, have now begun to take up the task of setting up an office to look after their future. And it's not just about investments, it's about every aspect of managing the family's affairs. But some of the things that didn't change, one of the things that does not change is when it comes to family offices and their investing and creating and management of wealth, that they have this unique problem that most other investors don't have, which is the problem of managing perpetual cash flows. It's like, money is coming in from the business and you have to keep putting it somewhere. And that's usually not a problem that most investors have. Most investors have money coming in from time to time and they invest and they have time horizons. But here is a pipe that is funneling in cash and I got to keep scrambling around to putting it somewhere. So unfortunately, if I'm not thinking it through, I end up putting it in whatever is the most readily available option. And therein lies a slight challenge that there is a lot of what I would call product sellers. I think this is not derogatory in any form, but that they're doing a job, they're bringing products to families. So a lot of the investment starts going into different products for reasons not so completely thought through. Now, this really happens successively over a period of time, and then suddenly you have a portfolio, and we see this a lot. You have a family with multiple hundreds of crores of portfolio in which there are 2,000 line items of investments. That's really difficult, and it's more endemic than you think it is. So that is the one which we are trying to see, how to make that better. The other problem which persists is that of conflict of between advice and product sellers. And we are finding that as wealth is increasing, family offices are actually getting more and more defensive about whose advice should they actually believe. And therefore, the reason to come to hire professionals so that they can differentiate between, is this good advice or is this not? So see, these are some of the features which are coming forth faster now. I think there are more than 20,000 people with more than $30 million worth of equivalent of wealth. And that number is growing, like you said, at about 30 to 40% a year. And that's the big change that we are seeing.
Thank you for those very, very interesting trends actually that are coming up. Tushar, same question to you. Top of mind trends that you're noticing in the business.
So, interestingly, just about, say, about an hour before I was due to be here, for the maybe 20th time this week, I got a call from someone, and the two standard questions were, market कैसा लगता है, market क्या लगता है, और अब क्या लेने का. So, I mean, if you look at how equity investing has shaped up in this country, we had an entire generation of entrepreneurs, of people, even people from the service class. Let's say if I go back to my dad's time, the number and nature of options in equities were very limited. There was lack of depth in market, lack of liquidity. There was lack of transparency, and disclosure norms were not as prevalent as they are today. And the markets were controlled by a fewer set of individuals and institutions. The experiences of that generation has actually impacted not just their generation, but also the one generation below them. So I personally, for example, got exposed to equities very late in my career. Not until I switched careers from consulting to equities just over a decade back, that I really got a proper exposure to equities as a systematic form of investment. If you would think that this is an isolated case, but the fact is that even today, within affluent India, within a lot of the HNI and entrepreneurial community, the understanding about equities is very, very limited. You come to other asset classes like real estate and gold, there's far better understanding, there is far better comfort, and therefore, even in an relatively illiquid asset class like real estate, people are far more comfortable investing large sums. And the concept of buy on dips, I think the best way to understand that concept is to see how people of the lower strata in gold. Every time there is a fall in prices of gold, you'll find them investing small nuggets, small tokens of money into whatever savings they have, they channelize into gold. So it is, what I see now is that there was this lacuna, the understanding of equity as an asset class and the exposure and the way to play it. That is now changing. People are now becoming more aware. You have an entire set of wealth managers. If you take cricket as an example, right? So you have your gully coach, you have your school coach, you have a professional coach at the district level, you have a state level coach, and now you have international coaches as well. And then you have individual coaches. So there is, for every kind of requirement, there is a coach available. Similarly, you have your wealth managers, you have your brokers who advise assets, you have systematic professional firms who are advising, and so on and so forth. So clearly today, the number and nature of equity investments, the options available, opportunities are far better. The advice that you have available is far better. What is needed is for someone to explain to the HNI or to the individual who's investing why equities as an asset class stands out. What is the concept of risk management? What is the concept of portfolio construction? So rather than attempting it as one single stock or one single idea or a tip, you try to understand it as a portfolio construct. The moment we have more of this education, and it's already happening, the last 5-7 years, we've seen that trend where people are becoming more aware about equity as an asset class. And quoting the previous discussion, the innovation on product side is certainly happening. And you have now offerings which are more tailored You have AIFs, PMSs, which are more tailored to the risk appetite for HNIs.
So, I want to actually come to that in a bit in terms of the additional offerings that the market has as of now. But Sudeep, no, I mean, I don't want to say this, but maybe we are guilty of it. We do have to ask you, as I said, I have a day job as well, saying, market ka kya lagta hai? But that apart, what are the kind of conversations that you're having with the HNI clients or, ultra HNI clients? What is it that they're seeking? What's the future?
Surabhi, what is happening nowadays is, I think, awareness about whole lot of products have increased. While we are talking equities, and you're absolutely right, the first question somebody asks us, because we are in the market, is kaisa lag raha hai, kya lena hai? But the conversation goes beyond that. They talk about REITs, they talk about InvITs. So I think these are new trends, and people are aware of it. In the sense, I'm not saying they are fully clued into this, but they know these terms and they know these are emerging as investment opportunities. So to your question, Surabhi, I think the first thing which I would say in wealth management is the basket of product. The opportunities are increasing. In fact, you touched upon it in the earlier panel as well. People are willing to experiment. People are willing to look at newer products. And of course, Gen Z is getting into cryptos and God knows what all. But trend is generally to experiment. I think that's the first change as far as this entire wealth management landscape is what I'm seeing. The second thing which very clearly is noticeable, that's the wealth effect. Earlier when we talk about wealth management, we used to be in Bombay, Delhi, Kolkata, Bangalore, a few other towns and cities. Now I think there are, maybe 500 towns and cities where some kind of wealth management service is required. And that's big. I don't think there is any wealth manager today who can cater to this requirement. But people need service. They have realized that, just buying traditional equities and investing or, putting money in gold and real estate is not good enough. They need to do something more. So the third point is somewhere, and this is fantastic for the industry, people in general have realized the need for a wealth manager. And that's a big thing. I can tell you about 10 years back, 5 years back, also this was not necessary. Some mutual fund distributor is coming to meet and they invest in mutual funds. Some broker is calling you, you invest in equities. Some real estate you are buying. Gold, of course, they've been buying traditionally. But now the role of a wealth manager to, in a structured manner, handle your wealth, that has come about. I think these are extremely important. I'll give you an example. We go to a physician, he's one of the most renowned in Bombay and 80 plus. Because what I do, he shared his portfolio. I'm not his wealth manager, 81-year-old, so he has his own wealth managers. It's amazing. He has invested in 81 mutual fund schemes. Somebody has made him do all this. It's crazy. Just imagine 81-year-old gentleman, and his wife also is 79. She has, again, 61 schemes. Somebody needs to sit down, consolidate, and do something. So the role of wealth manager is very, very critical. It's just not picking up some investments at random from here and there and try to optimize your income or wealth. They need to adopt a structured approach, and that's where the wealth manager comes in, and this need is being felt. So one, the product diversification. Two, geographical span which has increased, and third, fundamentally the role of wealth manager is being understood much more widely now.
And that's a great point, right? And I think the more complex markets get and the more chaotic and erratic things get, people realize they need someone to handhold them through the whole wealth journey. And someone who can be accountable and someone who's going to be there to answer the questions, right?
Absolutely.
So, Richa, let's bring in the DBS perspective in this market now that you've heard the other panelists as well, and DBS has been here for so long.
Very valid points by my co-panelist. And in fact, I'll just add to the list, which, we've been kind of continuing from family offices to equity to, wide kind of, diverse and dispersed kind of, the requirements that customers might have. There's one more element which I feel that has been trending of late, and especially after COVID and maybe before that, is around technology, right? So we see a lot of this wealth management industry is evolving into, is bringing in a lot of digitalization. into the way we would serve our customers, the way we would give advice to our customers, the way portfolio insights can be tailored, customized for our customers. And that's what is trending big time, right? We see fintechs actually eating up that space. We have fintechs like Grow, Zerodha, pretty much like, we all know about the success story there. And every day there are these newcomers which are being added to that list. And in fact, even the banks are gearing up to that and gearing up to the, in terms of creating those customer journeys, best in class kind of experiences for their customers, and enabling, to Nilesh's point, enabling the front line with those tools which can be then used while they are advising their customers. So I think that's something which is trending, for good. And I think I see that there's going to be a lot of innovation and product innovation that we see going forward.
So,
Yeah.
let me just ask you a little more, dig a little deeper on the digital aspect of
Yeah.
it and how it's playing out. Because sort of, if you think of it very simplistically, you'd imagine that the younger lot, the millennials, or maybe the second or third generation of the family, they are more open to transacting digitally, taking decisions digitally. But when you're talking about family offices or ultra HNIs, then how does the digital piece fit in? Because I'm guessing that they need a
Yeah.
certain, sense of personalized advice.
Yeah, it's a very, very valid question, in fact, Surabhi. And that's why this whole customer segmentation and client segmentation plays a very important role, right? We need to really understand what is the customer persona, client segment that we are catering to. Family offices, yes, very niche, very, handful of families that, we can think about, and very competitive space. But when we look from a bank's point of view, we cater to from retail to very sophisticated HNIs and ultra HNI segment as well, right? Within that also, the different personas. In fact, like, for my business, I look at 4 personas very clearly. One is the SME promoters, owning a business. Second is NRs, non-resident Indians, because, that's where we look at our cross-border collaboration. Third is senior citizens. We have around 40%, 40+% of our customer base, which is senior citizen, and their need, their servicing need is very high touch, very personal. It cannot be serviced digitally, right? And then we have a fourth segment, which is professionals who are in corporate jobs, very different, very busy people. How do we kind of, give them solutions which are easy for them to maintain, and they don't have to really apply their mind. They're not sitting every day monitoring the markets, right? Or asking the question, aaj kis mein paisa dale? Right? So they are like, they have their own priorities, and how do we kind of, cater to that segment? And that's where this client segmentation becomes very critical, and how do we kind of cover each segment more effectively? Yeah.
Fair enough. Let's also talk about the opportunity beyond Mumbai and Delhi, the wealth in Bharat, as one of the earlier panelists also mentioned, and how one kind of taps into that. So, Ashutosh, your thoughts on this, experiences already, and what you see ahead?
So actually, in the space of the ultra high net worth customers, it's very surprising. 25 years, this business, we set it up as our own family office, but look, because of the background of the Indian industrial growth, which came from absolutely anywhere. I mean, there was a time it was concentrated in Calcutta and Bombay, right? But we all know it's just spread out all over the country. And there were, tax benefits given to promoters to set up industries somewhere else. We are now finding, for example, one of our most important markets is Goa. Yeah, right? It's not Bombay, it's not Delhi. So I know that
all the wealthy have managed to do it right and shift to Goa by the time they turn 40.
Well, whatever you may call it, and this is traditional. These are multi-generational family businesses. Okay, we are very actively looking at Kolhapur, right? There are huge pockets of business families that have existed there. They've been low key, they've been below the radar, but somebody mentioned the younger generation is stepping in. They want to get more structured with their money. They recognize, they see all the information around them. They're too busy with their business to get involved with it. So they need wealth managers to come in and structure it for them. They may know what they want from it, but they don't know how to get it themselves. And you spoke about the role of technology. Technology exactly comes in there. More than the interface that you create, and that's where the technology plays a role in the retail market, in our end of the market, technology plays a role in providing insightful analytics. So when we build a portfolio for a client, we build an advisory portfolio, we have deep analytics into every security that goes into it. And what is really going to be the profile, how will it pan out, do a back test, put our own money and test it for some time. So that's how the research framework, which is equally technology driven, today is driven by machine learning and AI. So we have a research framework in which we cover more than 7,000 securities globally. For each of these, we use machine learning and AI to understand where is this going and where is this coming from, because we have portfolios of our own and of our clients elsewhere. So, but to address the question of, is this going to go into smaller cities in India? Of course, yes. I mean, I was in Baroda the other day talking to a room full of entrepreneurs who each own a business which is 1,000 crore plus in revenues and is second generation or third generation. And they're all keen to know. And, this is Gujaratis. For them, the affinity to the markets is like instant. They all know the market. But still then, they said to us that, look, we know the market, we can trade, but we need to build a portfolio that's going to last 3 generations. That time we don't have. So clearly across the country, there is a recognition of the fact that we need help. Help has been coming by way of distributors landing up at your doorstep. But I think the seriously ultra high net worth recognize that won't do. It's okay for the moment, but you need properly worked out strategies. We test baskets of portfolios for clients. That's what you need. I mean, you spoke about 81 mutual funds. We created a structure using analytics where we can create baskets of mutual funds for different profiles. And we think wealth managers should be offering that. It's not somebody's opinion. It's based on statistics and data. Are you a value investor? Are you a momentum investor? Do you need a high quality portfolio? Do you need a technically poised portfolio today? These are answers which wealth managers have to give to ultra high net worth families, and this is where technology will be used more than just reaching out to millions of people. And that's what we are seeing in our little pot. I mean, we don't have many clients. Like I said, at best we could have 500. But each of these use technology in a very different way. And each of our clients are extremely savvy about technology, extremely savvy about all kinds of opportunities you spoke about. So we invest for them globally, and they understand what it means. So building portfolios today for clients who even come from Kolhapur or come from hinterland of Baroda, most of the people who came to Baroda, actually their factories are in Valsad and Atul, in that space. So they know information overload is there, but I think it's important to reach out with the right package solution, using technology to even create the solution.
Okay, that's great. That's a wonderful insight. I've been using technology to then offer custom-made, tailor-made solutions to clients. Tushar, very quickly, and we'll sort of keep it brief in the interest of time as well. What do you think could be the differentiator? Because this is also obviously becoming an increasingly competitive business. So, what is the recipe for success?
You mean for the investor or for the service provider?
For
The
the wealth management industry,
for
yeah.
the wealth management industry. So, excuse me. So just building on to the thought process that I was highlighting, there is no dearth of information today. There is no dearth of investable ideas within equity. There is no dearth of asset classes outside equity. What is needed is to have the right mindset and understand the needs of the individual and align the portfolio to the needs of the individual, right? So it's like you need a specialist, right? You don't need a general doctor. You don't need a physician. Maybe it's a cardiac that's needed or a neurosurgeon that's needed and so on and so forth. You need a specialist for the job. You need to understand what the investor wants and build solutions tailoring to that. Second, I think you need to keep investing simple, putting on the investing hat. What we often do as the industry, we try to, we get caught in what is the perception, that what is we are famous for. So there's a concept that I've coined, which is called flagship mistake, which is, what you're known for, and you become a prisoner for that skill or for that ability. So if you're known for value investing or momentum investing, it is typically that is what you'll end up doing. And you will not be able to catch up with the industry when the cycles change. As asset allocators also, you need to be aware of the funds that where you're deploying the money, the downstream deployments. You need to be aware of the different styles in play and the different phases of market. And you need to align the capital to those phases, right? There's this concept of ESG again, for example, right? Now, ESG is a fantastic concept when you look at it standalone. Is ESG a good framework to evaluate business? Of course. Governance aspects, environmental aspects, being fair to all stakeholders, and so on and so forth. But if you say that these are the 1,000 stocks universe, and of that I have an investable list finally filtered down to 100 stocks, of that I have to select 50, then you are essentially putting a constraint on your own investing style. So you have to be aware of what the market is, what the depth is, what are the options available to you, and rather than trying to force fit your logic or rationale on the market, you have to change and adapt to the market's cycles, change your style of investing and asset allocation to the times.
Okay, I'm glad you brought up ESG, and since you touched upon it, let me actually take the panel's view on whether Indian investors are really ready for ESG, or is it just one fancy term that everybody wants to know more about and somewhat loosely have associated with their portfolio? Anyone wants to take that up? I mean, what's the receptiveness to ESG?
I think what you said is pretty much, it's an exciting thing and people want to understand, experiment. If you really honestly ask me, is there a commitment towards ESG? I don't think. And Surabhi, in fact, incidentally, the world over, there is a lot of discussions on this entire ESG thing. And what is being touted as an ESG compliant stuff? Is it really ESG compliant? So it's a good thing to do, but is it being done in the right way world over? I don't think so. And a lot more needs to be done. Undoubtedly, a lot more needs to be done. But I don't think what is happening today is optimal.
The thing is that I guess people will say Nvidia has gone up 300%. Let's talk about Nvidia and let's invest here. Whatever's fancy, or crypto's gone up. But ESG is more about thematic. It's more about doing the right thing, but also sort of looking at returns. So your thoughts?
So since we work with a lot of businesses and many of them are private, here is the insight that I have, that private businesses are built on a more sustainable principles than publicly listed businesses. And when we started to investigate this, we said, why does that happen? Why is it that private businesses are more responsible citizens to the community they exist in, to all the stakeholders, they look after their employees, and a lot of people say, oh, Lala company, and they look after people. But the fact is, the private companies do better. And the fundamental reason is that about 25, 30 years ago, somebody in the US moved the needle to say, you must report quarterly results. Now, if I'm a CEO of that business and my ESOP valuation and my bonuses are going to depend on every quarter taking number up, why am I going to think about sustainability? There's a built-in conflict. Now the same system is saying, please be sustainable. Unless you move the performance evaluation needle, you're not going to achieve the goal. Look at the private businesses and you understand. I mean, we were talking outside, Richa and I was saying, guess what? So many 100 years ago, if Tata's had said, every quarter my steel plant in Jamshedpur should give this much more result, you think they would have built the community and the reputation they did? I don't think so. But do business need to be sustainable? The answer is yes. You cannot be an irresponsible member of your society. You're answerable to them. So is there a need? Yes. But I think we need to align the interests and the incentives.
Now, let the lady have the last word on this, on ESG and other new sort of concepts, because let's talk about Singapore, a very, very sophisticated and evolved market. So what lessons for wealth management can we derive from there?
To start with, Surabhi, I quite agree with the panel here that as far as wealth industry is concerned, it's not yet evolved around ESG as a concept, right? There's no product depth. We don't have much. Even investors, in fact, the clients are also not asking about it. But as a bank, as a lender, and as our DBS legacy, ESG is a very important initiative that we drive, and we believe in it. And it's a big agenda with the bank right now. And as a lender, of course, every loan that we underwrite, ESG is is one of the biggest component that right now that we are enforcing as a part of our credit assessment. So yes, ESG is very important from a bank's point of view. It is evolving in India. Still, I think there's a lot to be done. Wealth, I would say yes, we're still not there. We're not talking enough about it yet.
So let me sort of, ask you a futuristic question. As responsible wealth managers, how do you drive some of these conversations? Because as I said, if it's a discussion around, chat GPT or AI or the next hot thing, I think those happen by themselves to an extent, right? But then ESG is a deeper concept.
To be honest and being practical, it's a good conversational point to have that discussion with your clients. But having said that, to be able to expect them to convert and start investing in the underlying, with ESG themes is still, I think, we still need to educate a lot more and create that whole ecosystem in India around AMCs, fund houses, everybody talking, and there should be a lot of conversation around this for us to be able to really, show some impact. Yeah.
One thing I want to add, I think the G part is understood. Governance, I think everybody wants to be with a good governed organization or an investment which is governed properly. So the G part, I think, has caught on.
Because that directly impacts your return.
Absolutely.
If the G is missing.
Absolutely.
It's a very small thing, and I should mention that very small thing that we're trying to do is all our communication or all our customer communication. If it is a printout, it is going as a recycled paper on a recycled paper with the mention that it is a recycled, right? I mean, that could be one of the starting point to have that conversation with your clients that, yeah, I mean, this is something that we believe in. At the end of it, it's not something that can be, changed overnight.
Okay,
Yeah.
to wrap up.
There's just one thing.
So because we've already run out of time, a one-line wrap-up summary, Indian wealth management, 5 years from now, when we're maybe at the 5th summit, what would the landscape then perhaps be looking at? How do the next 5 years look? Ashutosh? Just a quick summary. It's a crystal ball gaze kind of a question.
So 5 years later, sitting in this room, my guess is you multiplied your opportunity scape maybe 20 times. 20 times the number of people are interested in the services. I think we have a slightly more evolved buyer who knows which questions to ask. But the big concern that I have today in my mind, and I hope that doesn't remain, is that are we going to play the role as a true fiduciary? Which means, are we going to work hard at removing all conflicts? Will we move from being product pushers to genuinely giving fitting products in the need of the customer? That's where the area of concern is. A lot of our industry does pro-cyclical selling, and that's what causes a lot of heartburn among the investors. That's the one which 5 years ago, I hope, will move away.
Fantastic. I think that's a very, very positive note to end on, always keeping the client at the center of your universe. I guess that's pretty much, the underlying, reason why we're in this room today. Thank you very much to this panel for sharing your viewpoints and insights. I really appreciate it. Thank you.
Well, a big thank you to all our panelists and Surabhi. Well, of course, we have had 2 very good sessions, and I'm sure the audiences have loved the sessions so far. So we've spoken about tech-enabled wealth management, democratizing wealth management, and taking it to cities where money powerhouses are. Of course, wealth managers need to change their game with changing market trends, and of course, that includes ESG, sustainability trends and funds as well. So we've spoken about that, but we have much more to discuss, and so we will do that in our next panel, which is called New Age Wealth Management Approach with Inspirations from Singapore. But before I do that, let me just put in a word of, actually an information that right outside, in the pre-function area, we have some financial experts from DBS Treasures to answer your questions on wealth management, and if you want to start your journey or you have specific questions. So they will be around for all your queries, so make use of this time. All right, let's move on and speak about Gateway to Successful Wealth Management. And lessons from Singapore. And to moderate this session, may I invite my colleague from CNBC-TV18, Ritu Singh, and her guests for this session. Put your hands together for Lakshmi Iyer, CEO, Investment and Strategy, Kotak Alternate Asset Management Limited, Swaroop Anand Mohanty, VC and CEO, Mira Asset Investment Managers India Private Limited, Feroz Aziz, Deputy CEO, Anand Rathi, Private Wealth Management, and Bharat Mani, Managing Director and Head National Distribution, DBS India.
Mugdha, for that introduction. As you've heard, the topic of this panel discussion is wealth management in a digital era, and the unprecedented convenience that digital apps, digital applications and tools have brought to wealth management today. I mean, there's a lot to be grateful for. There's a lot of opportunities, but also a lot of challenges. So to address all of that, I'm hoping you have answers to all of the questions that we're going to have today. And Lakshmi, let me kickstart with you. You played with finance and technology very early on, I think, back when we weren't really talking about it. So just to set the context for our audience, how has the wealth management space itself evolved with the advent of technology? And I'm not talking about, say, artificial intelligence that has existed for the better part of a decade, but these newer tools, the crash course that we've got in generative AI recently, blockchain, that is, all the talk. So set the context for us about how the space has evolved thanks to digital.
Wow, I got the first question as the bouncer question or the googly question. I don't know, but let me try to do full justice to it. You're right, Ritu, I started off marrying technology and finance back in 2000 with a firm called Credence, where I spent just about a year and a half before Kotak decided to hijack me. There it was all about just the nuances, because the market people were not tech savvy and vice versa. But circa 2024, I think things have changed, and rightly so. We are seeing these days even Bollywood, the female protagonist actually being a robo. Have you seen that movie, Teri Baaton Mein Aisa Ulja Jiya? Have you seen that?
No.
Anybody seen?
Anybody
Swaroop, have
else
you
on the
seen?
panel?
No.
No,
Okay, so in this, there is Shahid Kapoor, who is the male. Have you seen the movie?
I've heard about it.
Okay, so you must watch it. And there is Kriti Sanon, who's the female protagonist, and she is the robo in the movie. And there's this very interesting dialogue which comes to mind since you asked me this question. So Shahid Kapoor asks Kriti Sanon in this movie, तुम इतनी सारी लैंग्वेज बोल लेती हो, हर तरीके का खाना भी बना लेती हो, पहली बार सिगरेट फूकती हो तो खांसती भी नहीं हो, तुम लड़की हो या क्या हो, अलादीन का चिराग? He asks her the question, he nudges and she says, हाँ मैं अलादीन का चिराग हूँ और मुझे तो घिसना भी नहीं पड़ता है. So I think that is where we are in terms of I think when you are talking about, a platform, whether it's wealth management or it's investment management, the expectation from the end customer is that you need to be that Aladdin ka chirag, which is offering you all of that, what you used to do maybe, decades back, 5, 10, 15, 20 years back, but in a much faster manner. I think that is where we are at this juncture. And are we yet there to be arrived at? Well, the answer is probably not. We are somewhere at the cusp of it, probably at the intermission stage, not definitely at the tip of the iceberg.
Okay, Swaroop, let me ask you then, what have you done with this Aladdin ka chirag? What would you say has been the biggest impact that technology has had in the wealth management space?
So let me take you back to 13 years ago. No. Thankfully, movies is Lakshmi. When I was interviewing with Mira Asset, and my boss then had asked me this simple question: how long will it take you for you to talk about your product to the entire country? It was like a googly question to me, so I flipped it back to him. And I said that, this question was definitely out of the syllabus, so I flipped it back to him, and how long will it take in Korea? He said, 45 minutes. I said, what are you saying? He said, everybody has a phone. Right, and that's where it dawned to me that, this is going to change, right? But the story was going somewhere till COVID. I think post-COVID, what we are seeing is the beginning of a digital transformation in India. I think first block of us moving to a transactional era of digitization has happened, though I still feel, as a mutual fund industry, we're lagging behind. Please remember that the 3 years of COVID, we transacted digital only, and there was no reason why we should come back to the physical phase after COVID. It's a step back. So the first step, and please understand, India is a large country, integrating the two. Earlier, the money used to transfer from Mumbai to somewhere else, and then used to go back to Chennai or Hyderabad, because that's where the RTAs were and the reconciliation used to happen. But that's not happening anymore. So a lot of work has happened in the first phase. But like Lakshmi said, I think just the beginning of what can be a very different era. When I compare ourselves to what happens in Seoul, we are actually a lot behind them.
Okay, Feroz, let me put that question to you. As someone who's been in the space for so long, would you say the industry is at an intermission? Are we starting out? Are we nearing the end of the movie? How far advanced are we in using technology in the wealth management space?
So, yeah, I think the mic is working here. In my opinion, I think breaking technology into... So if you are first, let me answer you of the pointed one. I think we are still scratching the surface. We're nowhere at the middle of the movie or the end of the movie. Because I think there's lack, in my mind, there was lack of clarity. Let me not generalize. The use of technology can be for threefold in our business. One is to create advice. One is to deliver a report. One is to transact. I think transacting and delivering a report is a more, in my office, not the most intellectual work. Creating advice using technology is the missing link. We are very obsessed by giving a report. That my office boy used to do. Deliver a physical report. Of course, not environment friendly though. Now it is. So I think using technology for advice creation is something which I think the industry needs to focus on. Now, we're speaking of artificial intelligence, right? I think natural intelligence also in our industry requires a lot boost. When I interview people, like in 2016, 17, 18, I got very obsessed by interviewing people. I interviewed 400 people. And I could offer 22. And of course, 8 of them accepted the offer. Then I said, it's impossible for me to build a business if I have to spend so much energy. That's when we started training some youngsters internally. My questions used to be, tell me one Nobel Prize winning formula for portfolio creation. There's only one. Name that for me. What it says is a separate story, right? If there's, in my stream, if somebody has won a Nobel Prize, would I at least read that basic information? Who won it? And what are the derived learnings? So that's natural intelligence. That's not artificial. So I think digitally, I think we have a long way to go in using it to create advice. Now I use a Monte Carlo simulator to simulate 1 lakh years random paths of Nifty. That takes a supercomputer overnight. But are we doing that enough or something else? Maybe this is very trivial. I'm just giving you an illustration because I've been fortunate to manage the treasury as well. So I think that's what hurts me, that people are being very obsessed by execution efficiency and reporting efficiency in digital wealth management.
Bharat, are you also upset about the fact that there's too much focus on execution, generating reports? Just broadly give us your sense of what at DBS has been your approach to wealth management, given your experience, given your heritage, going through your own digital transformation journey. How have you adopted some of those practices into your India wealth management business?
Thanks for that. I think it's fairly well known that at the turn of the century, DBS was one of the banks which was historically more physical than digital. And sometime in the first 10 years of this century, we turned around and said, this is digital is the future. We want to adapt digital in a big way. And in our home country, Singapore, I think that change started happening very early on in the 2010s and 2012. And today we are known as a digital bank largely, though we also are physical. So I think that leap forward, we saw it coming early, and everything digital, and as somebody said in the earlier panel, everything mobile, even jumping over the internet was, a kind of a vision which we set out to do, and that came into the wealth management space very early as well. more so in Singapore. And we've got lots to catch up on to what Firoz was saying. We're still scratching the surface in India. But I think we've not yet fully scratched the surface and gotten to the depth even in Singapore. But we've, compared to some of the discussions which we've been having during the day today, I think fairly evolved. We've got concepts for digital tools for high-end, high net worth clients who are more complex, who need customized solutions, who are very, very risk conscious as well. They know where they stand in terms of risk. How do you customize bespoke solutions for them? And we use a tool called Portfolio Analysis and Enablement Tool, which kind of tries to balance out customer needs, bespoke solutions, great service to his point, on, and not just the portfolio piece, but also delivering when the client wants the service when he needs it. And also at the lower end, while we've been largely speaking on ultra high net worth, to the hoi polloi, and as we get into India, people spoke about wealth management in tier 2, tier 3 cities. It will be impossible for us to set up physical RM in every city. So how do we look at solutions which are digital? We call it digital wealth. Conceptualized, implemented, millions of people, millions of our customers across the rest of the world, specifically Singapore, use it. And now we bought it in India as well.
Well, let me take that forward with you, Lakshmi. Digital, phygital, these are some of the words that we've been hearing. But the fact of the matter is that your audience, your client is very different across different age groups, across different geographies, the penetration into tier 2, tier 3 cities. You know, a one digital solution may not apply to all. How do you see this space evolving? What is the ideal ratio? Will there always be the need for that human touch? Or can the industry turn completely digital at some point, maybe 10 years, 15 years into the future?
See, it's not about digital or physical or phygital as they call it, but let me attempt a new word called digital. So I think digital is the word where you are going to have digital at the forefront and yet not forget your roots in terms of having those physical locations. Phygital will give you a feeling that, okay, have your physical locations, but then have digital as an ancillary, whereas I'm just flipping it and making it digital. I think that is the way forward, at least for us at Kotak Alternates. That's what we keep thinking, because ultimately, you don't need to necessarily have locations or, branches or, just for the sake of it, just because everyone else is doing it, because that was the thing of the past. COVID has taught us a lot of these lessons, how things can be done digitally. So I think the buzzword here clearly is digital. There is no cookie cutter approach to this, how you are going to approach it, but there could be a secret sauce for every market, for every region. It's important, but not to completely give away your physical presence. At the same time, rise to the occasion and ensure that there is that digital awareness wherever it is required.
But let me just take that forward in terms of Kotak's digital approach. How is your target audience, target client itself, the pie, expanded? Any statistics you could share with us? I mean, we heard in the previous panel, Goa is somewhere a lot of their HNI clients are now coming from Chittorgarh and, various places in Gujarat. We know that India is generating a lot more HNIs every successive year. It may have the largest HNI population in the next decade or so. But are there areas where you're seeing, more wealth creation, just trends in terms of geographies, age groups, and how you're approaching that with that digital approach?
So, when we did our fundraise for one of our private credit funds early last year, you'll be surprised to see that so many of these applications actually came in not necessarily from the top 4 or 5 metros. It actually came in from the next 10, 15 locations. Even those entities which were not directly approached, for example, to raise monies, because the ticket size, which mandatory is about 1 CR, actually we increased it to 2 CR because we wanted limited reach in terms of bandwidth. And you'll be surprised that even those who did not belong to those locations, which is the top 5, 6, 7 locations, even those geographies actually evinced interest. That goes to say, and in fact I was I had a couple of meetings with SEBI last month. And even in that, when we were sharing some data, and this is the industry-wide data, clearly tells you that the aspiring investor fraternity, the one who really wants to create that wealth, and for the long term, not necessarily they are fly-by-night, is actually not coming in from regions that, you and me belong to or where we are part of. It's actually coming in from locations probably that you couldn't have, actually thought of. So while Chennai could be one, a potent metro. There is tons of money sitting in places like Madurai and Salem, for example. Mumbai is your bedrock and your mainstay, but there's tons of money which is waiting for you, in Indore, for example. I just got back from 2-day road shows in Punjab. Ludhiana, Chandigarh, we all know, but Ludhiana is absolutely right there. So I think I can give you a lot of these examples, but this is where wealth creation is, I would not say started, but I think this is where the awareness factor is significantly higher. And mind you, I'm going to Punjab after 5 years. So I went there pre-pandemic and I'm just going there right now. I can see a sea of change.
Well, Swaroop, are you also still traveling to Punjab and to all these places? Or do you think your digital tools are enough to capture that new audience in tier 2, tier 3 and beyond cities? Or would you need to have a physical presence to first capture that and then, of course, convert them?
See, actually what's happening in India is pretty staggering. When you go back to the wealth setup in India in 2008, 2010, it was a pyramid with the top half of the ultra HNI practically a single dot and 65% of our population at the bottom of the pyramid. That in 2023-24 is looking like me, thin at the bottom, a little tummy in the middle, and then the head looking bigger, right? In 2030, this will look a larger version of me, with 15% of India at the bottom line and the real, what we call the middle class, really looking serious. And that's where it changes. See, the demography is changing. With 60% of world population under 30 in India, this story is changing faster. Let's look at the mutual fund data. Post-COVID, we were 2.3 crore folios. Post-COVID, we were another 2.3 crores. That's the demography playing out. And between my father, me, and my son, economically, they are very different. So their approach will be totally different. I feel my son's approach to money management will have no correlation between me and my father.
Will your son come to Miri or will your son download Ro and Zerodha?
He's already there. He's 25. He works in generative
So how
AI.
are you at Miri
So here's my
solving
story.
the problem to get that customer?
We work in 26 cities. We don't have 200 branches. Our data on growth on folios is equal to the industry. Our data between top cities and bottom cities is the same of the industry. For 2 years, we are sitting without a small cap fund. Today, without a small cap fund is you are not an AMC. But our growth has been intact. Let me tell you, the only constant inflow has been the digital side in these 2 years without a small cap. That's where is the story. That's the power. But having said that, the Indians across board, maybe the bottom half will transact and do business completely digitally. The top half will get different products, which was discussed earlier. They will have a transaction digitally, but will do business physically. That physical can be through Zoom or whatever, but the human interaction will remain. Now, COVID has taught us that we can do that digitally, that we do. But having said that, I travel 2 days a week, I go across the country, that I enjoy doing that. Lakshmi and I go back almost 30 years in that, but we will continue to
I
travel.
think we've established phygital or digital, as you put it, is the way. But Feroz, a quick word from you as well. We were talking about the younger generation coming into this space now, new billionaires being created at a very young age compared to what we'd seen traditionally 10 years back. How has the evolution of fintechs in this space changed the game for you, whether it is the impact on the business, the way you go about distribution? Overall, is there some of the market share they've taken away? How are you countering that?
So, firstly, I would want to say I'm so fortunate to be on the same flight with Lakshmi, because if she's gone to Punjab after 5 years and I bumped into her, that's quite a low probability event. But having said which, from a digital side, we also have a subsidiary, which is a digital subsidiary. Every time I've been asked this question before IPO or after IPO in the 10 little results we've given, I've always said value it at 0 to the shareholder. Why? Because I think one thing is not cracked as yet. How do you eliminate the heart aspect when you digitally handle? Let me give you some stark data. Indian equity mutual fund, if it's a proxy of human behavior, investing behavior, lost 25,000 crores in the FY21 was the net sales of equity mutual funds. Okay, active equity mutual funds was minus 25,000 crores. 96,000 crores was the SIP purchase, which implies lump sum purchase minus lump sum sale was 1,25,000 crores negative. In that year, Nifty averaged at 10,900. When the mind told you buy low, sell high, your heart made you do just the opposite. How do I digitally deliver? And when the market falls 10%, whom will he call? Or will he act because of that emotion taking over? Is something which we have not been able to crack. I'm sure industry might have been. And ironically, this year, where mutual funds have delivered alphas over Nifty, and Nifty has delivered 27.8, not this year, the one which went by, financial year. The total purchase in equity mutual funds is 1,85,000 crores. SIP contribution is 1,96,000 crores, which implies a 10,11,000 crore negative lump sum purchase minus lump sum redemption, which means some people are getting out of equity sooner, right? And I don't think India is consuming for the goals we've not invested. Second biggest problem is if digital can solve this for us, and I think only digital can solve this for us, is if you look at the Indian financial assets, out of the total households, if Indian household was one man or one lady, more so, 800 lakh crores is the financial assets, give or take, as per RBI's information, largely collated from there. 800 lakh crores. You would be surprised that equity mutual funds is 23, 24 lakh crores of individual holding, and direct equity individual holding is 24 lakh crores, which implies a total of 50 lakh crores on a 800 lakh crore. We speak of 50% in equity, 30% in equity. If you do some shows on TV, you say 70% should be in equity. India has 7% of their household savings in equity.
Well, Feroz, kudos to you for remembering all of those numbers and narrating that mini budget for us here. But my question was what the competition from fintechs has meant for traditional businesses like you. Like you said, digital, of course, is going to play a huge role. But what has that meant for you in terms of your own business, in terms of retaining customers? Because it's as easy as switching from one app to another today.
Yes, but fortunately, we are in the segment of HNI where the person has, other than the home he lives in, 8 to 10 crores at least. He might start with a couple of crores, but that's the first litmus test. And in that area, hand-holding the person and convincing him to have an asset allocation is far more important. So fintechs are in that segment of maybe up to 1 crore, 2 crores. They will come into our segment. That's why to prepare our business for 10 years from now is why we have a digital business, so that we understand the evolution and not be caught off guard.
Okay, since our time's running short, Bharat, quickly a word from you. When you look at some of the digital forces that are shaping the way the wealth management industry stands today, what are you most excited about the emerging technologies and the trends that are not just out there on the white drawing board, that have practical usage?
I knew you'll throw googly at me, but let me try and take
Definitely not at Feroz. We'll have
no, so let me try and, all of us on this panel do understand that we are still scratching the surface. There is a lot of headroom up there in digital. Feroz rightly touched upon the fact that we are using it now more in a clerical manner rather than in an analytical manner to deliver advice to our customer. That excites me a lot. Also, given the kind of changes which are cropping up and this animal called AI, which we loosely talk about today, I think we have to get into a far deeper understanding on the capabilities of AI, how it can adapt itself to advice across the spectrum, whether you're an ultra HNI customer where so far we've been using bespoke solutions, using a physical RM, can that be replaced through AI analytics and therefore delivered to that customer with a seamless delivery? That's exciting again. I mean, I'm looking towards the future to answer your question. We are not there in the present on this. And then specifically in the Indian context, again, as Lakshmi said and as Feroz said, the Chandigarh example, I'll give you another example. There is wealth getting created in places which you would never imagine. Do you know in the city of Varanasi and in the city of Ayodhya, we have all different views in terms of what's happening out there, but the sheer population of these two cities, because the government and because of crowdfunding, the buyout of land and their shops that these age-old shopkeepers had. They are sitting on funds, they don't know what to do with it. Okay, so recently somebody went to Ayodhya as a part of the trip and they came back and said, boss, people are really, really wealthy. They are sitting on a couple of crores when they used to have 2 lakhs as their disposable
Well,
income.
here's a
Let's
tip
see
for
what we
all of
do.
you wealth managers.
So-
If you haven't already made a trip to Ayodhya, there's yet another reason to do
and therefore,
so.
I'm saying that the future is exciting, really
Okay.
exciting. And I think clearly digital is an how do I say, misused word. There are facets we need to pick up out of digital and see what really can we create value out of.
And fit to this
And fix
market.
it, yes.
Quick word from both of you, Swaroop. What are you most excited about in terms of emerging technologies in the wealth management space?
See, I think more than emerging technology, I think Firoz talked about some data. You have to get the fundamentals right. I mean, we are a group of long-term investors making short-term investments. That's the truth. Till we don't align that, wealth management does not take off. That's why we're just 15% in the growth assets. So we've got to get our act right. Reaching people through technology is just a matter of time. What is now a product game will move to solutions. And are we ready for a digital transformation? Something which we have to ask ourselves, because the first disruption that happens is cost. Are we ready for that cost disruption? It's something we have to ask. We have to willingly work on our business models to realign to that cost disruption, and that will be the Spotify moment of the industry. It has to be completely client-centric. There is no other rule in this business. What is right for the client is right for us, and hence, once this transformation happens, it comes with a lot of disruption, and the biggest disruption, I'll say, is the cost disruption. Are we ready for it? Something which I doubt if we are.
Okay, Lakshmi, you have the final word.
So we all know what excites all of us, and I think there's one thing which I constantly share with my team is something which I heard in one of the boardroom discussions that I had with our non-executive director, Mr. Kotak, and he said this, and it's so appropriate for all of us here as well, that digital or technology is like God. If you believe in God and there is God, there is no problem. But if you don't believe in God and there is God, you have some serious problems. So I think, I think for all of us, the key challenges that Rumal Dal Do is very, very important. Quite a few of them are still in denial mode. कि ये होगा क्या? I think it's time to ask yourself, ये कब होगा? And then work towards it, because होना तो ये है ही. आप मानो या ना मानो.
All right, on that note, Mano Yana Mano, Firoz, Bharat, Lakshmi, Swaroop, thank you very much for candidly sharing all of those thoughts with us. Pleasure speaking with all of you. And thank you all for being a wonderful audience.
Thank you so much to the panel. A big round of applause, ladies and gentlemen, for that very insightful, candid conversation that we have had. All right. Now to draw the DBS Treasures Annual Wealth Summit, powered by CNBC-TV18.com, to a close. Please welcome on stage Mr. Ashish Jain, Executive Director and National Sales Head Treasures and Wealth at DBS Bank, for the closing note.
Thank you, CNBC team. First of all, congratulations to the CNBC team. I think you all always are successful in getting such eminent speakers, so it's been a pleasure. A huge thank you to all the audience who's been so patient, and at the same time, I hope together with the CNBC team, we've been able to add value to what is happening in the markets and the world over. I'm a bank. So let me give you a little bit of what I do as well. So just a little bit, but I promise you I will not sell you a product. What do we do differently? So being a bank, we get to know a little about what our clients are, what our clients' transaction pattern is. And that's the starting point. So when we get that, our team of specialists work on analytics on our data, and at the same time, based on what the customer wants, provides some information or products which fits the customer's needs and asset allocation. Based on the customer's asset allocation is what we provide them so that the customer's long-term or short-term needs are met. So I'm not going into assets, I'm not going to equity, debt, or liquid, but at the same time, we do understand what the client's needs are, understand the customer's asset allocation based on the time horizon, and that's the way forward. So we use our digital assets very, very well
So enabling our clients through analytics, enabling them how to use and be able to invest on their own and build money. And when I say invest, I don't necessarily mean capital markets. It's also to the extent of term deposits, right? And we do all of this thinking of the personas of the customers. And that's what Richa had alluded to. So we need to think a little differently to the extent that what do you really need? So you're an NRI. You are probably more digital. And hence we enable you digitally and give you more and more information so that you are able to do so on your own. At the same time, our relationship managers are always there. So you call them and we're there. At the same time, you have the SME owners, right? The SME owners are not only investing with us, but they are banking with us. So our team of specialists on the corporate banking side help you through your corporate journey. But at the same time, on the personal banking side, we at Treasures help you through that as well. Mind you, when you talk about your corporate surpluses, we are there too, right? So overall, our team of specialists, along with our Treasures relationship managers, help you through your entire transaction journey as well as your wealth abilities as well. I will only say the last thing is that our Treasures relationship managers will stay in touch with you. They will tell you what we do and how we do it. Lend them a year so that we can probably give you some amount of a value addition. And therefore, we will be in touch with you outside and interact with you a little more. Thank you so much, ladies and gentlemen, for being here. Please join us for drinks and dinner outside. Thank you.
Thank you so much, Mr. Jain. Well, that brings us to the close to the DBS Treasures Annual Wealth Summit here in Mumbai, powered by CNBC-TV.com, TV18.com. Thank you for being such a lovely audience and for your time through this evening.
DBS Treasures Annual Wealth Summit, powered by CNBC-TV18.com.